class on this, so I'm not going to go into it tonight, but just to give you the basic orientation, on the side here, there are the different markets. You can click on the Forex, the futures, there's stocks, and there's all types of time frames with each market. You can have the lower time frames, the medium time frames, and even the higher time frames, as well as daily charts. Now, some markets, like certain stocks and so forth, there's only daily charts or 15-minute charts available, but for the most part, most of the markets have all time frames for you to choose from. Now, when you do select a market, let's say you select Forex, you'll notice that there's a whole bunch of markets for you to go through, and if you scroll down, you'll see it just goes on forever. You don't want to be running all these markets all day long. It uses up a lot of your resource, and as you can see with the yellow boxes popping up periodically, those are actually real-time updates occurring all day long for all these markets streaming real-time. So it's not ideal to have this running all day long. So what we suggest is you create a portfolio and just select the market you want. It's very simple. You just go click the plus sign at the top here, you give it a label, and it actually automatically saves it for you. And as you can see, I already have some saved, so I can click on my Melanie folder, and as you see here, I already have markets that I'm focusing on. So this kind of focuses your workspace. Now, you can add a market at any time. I can go ahead here and just click add symbol, and then just type in the market that I wish to add. I can add, it's just, already got natural gas. Got most of the markets. And you'll see that it'll pull up all the months of the year. Now, you only want to select the current month. So the first two letters are the actual market, and the third letter is usually the month of the year. So you only want to select the current month that we're trading in, and right now we're trading in the month of Z, okay, for the last quarter. And if you don't want specific time frames, you can just simply click the X's at the bottom here and just remove it from your list. So you can further cut down your list to make it more concise and more focused. You can also move these boxes around to just display what you want right side of the edge. Now I'm going to put the mirror over here, because what I like to do is crop it so that I have this view of just the markets that I want to focus on, and then you can put it on your, you can set up your workspace something like this. So you can have your ninja chart, your Segredo chart, and your real-time buy and sell signals along with your time frames. So you can actually follow the mirror signals. These are your real-time buy and sell signals as they come in for specific time frames, and you can actually align them with your strategy and your indicators confirming your entry, and you can take your initial trade off there. So this is the concept of the auto trading. It's auto signals generated for you to encourage you to take the entries you're looking for and eliminate some of the confusion and the hesitancy that you might have. Is there a way to lock the mirror into place at the left of the radar so that it is there when I open the program? Well, if you move it over, every time you pull it up, it should actually automatically stay there. If you notice, when I pulled mine up, mine was already there. So I'm not sure why it's not staying permanent for you, but you can send me an email and I'll try to troubleshoot it for you after class. I won't probably get back to you until tomorrow, though. So let's continue here. So tonight's agenda is covering the reversal trade. Now, I have downloaded the replay from this morning's markets. We're going to focus on gold today. And the key thing that I want you to note is that when we're talking about reversals, we're talking about changes of direction. So let's take a look at our 1-minute chart for a second here. And remember, what we're doing is we're reversing the direction of the previous trend or the previous direction. So as you can see here, the market is being downtrending for the good part of this early morning, and then at some point it starts to change direction. Now, the point that we consider it to be reversing is usually when the 13 EMA actually crosses the 20 SMA. So it's that cross that we use as our indication of the trend is now reversed. So sometimes the trend, the 13 EMA crosses and it actually goes into the trend, and sometimes the 13 EMA crosses and it goes against the trend. So it's very important to note that you will get reversals that are on the trend and reversals that are on the counter trend. Okay, so that's something we're going to talk about tonight. And when we talk about the trend, we're really talking about the price action, the candles, in relation to the moving averages. Because remember, the moving averages represent a whole bunch of candles over a period of time. So they represent a whole bunch of traders. So when you see the price action, majority of the price action is clear of majority of the moving averages, and we say it has to be 3 or more moving averages to be considered a true trend, then you know that majority of traders are trading in that direction. Now, when you get just a few candles going against the tide almost, going countering the original trend, that you know that you only have a handful of traders, and it's not always going to be sustained, or it doesn't necessarily mean it's going to hold for any long period of time. But it's this cross that we're really concerned about when we talk about the reversal trade. So we're trading specific timings on specific alignments. So let's take a look at that really quickly and clarify the timings of what we're talking about with reversals, and then we'll get into the issues. 7:30 might seem a clear trade, but it was a fake out. 7:30. Oh yeah, we'll get to that. That's you can see your stows were at the top and so forth. We'll get to that. That's another. That's a question for a different night. When I cover trending, we'll get into that. Now, here are the basic rules that I covered last week when we talk about the clear trade and the gap trade. And the reason why I'm just quickly showing you them is because when you think of a reversal, I want you to think of it as a marriage between your counter trend strategy and your trend strategy. So the reversal is actually the developing trend. And you can actually enter the trade in more than one place. So you can actually execute the strategy with 2 different timings. You can actually enter the trade starting with the gap trade. So you can actually enter here, or you can enter based on the clear trade, which starts from when the 13 EMA crosses. Now, when we talk about the gap trade, right, you'll notice the confirmations we look for are the circle with the dot. So the circle with the dot becomes the asterisk once it confirms. The candle with the long wick, there's a candle with a long wick. 5 or more ticks in divergence before we hit the 13. So here you can see we've got the divergence. We're closing the gap from the candle to the 13. And the Lundreg 4 makes a sharp V. So you're looking at this brown linear regression, gives you a nice sharp V. And of course, in certain cases, if you're using the HMA color change, that's really good for confirming that the direction is ready to change. So here you can see the red and green line, and it changes to green. Now we know that we're in a counter trend mode. But that's just the start of the reversal. That's the gap trade. And you will notice that what we use as well, what Barbara has included on gap trades, is the overbought and oversold information. And the way she's done this is that to find specific alignments to help you filter the noise almost, we want to make sure that we have additional confirmations, because in following with Shadow Trader's motto, which is you must have 3 or more indicators that confirm your entry to make it high probability, and the more the better. If you have less than 3, chances are it's a maybe trade. So when trying to qualify which ones are good and which ones are not, you must select at least 3 or more indicators in alignment. So in this particular case, when we're looking for a good reversal strategy, we also look at overbought and oversold using the MACD and the stochastics. So if you look here, your 3 stochastics are moving together, and you're from the oversold line, the 20 line, and moving up to go to the overbought line, which is the 80 line, the thin green line. The MACD, what we use for overbought and oversold information is the position of the MACD in relation to the center line. Think of that as the line in the sand. And on the one side, you're heading north, and the other side you're heading south. So here we're above the 0 line, so we're overbought. And here we're below the 0 line, so we're oversold. So when you see this alignment appear, and it aligns with the HMA changing color, leading towards the 13 and 20 cross, then you know chances are you're heading for a pretty good reversal. Now this is just strictly for the Ninja confirmations though, using your NinjaTrader charting package. And notice, however, back here, a little earlier, you're going to get the same lineup. You're going to get your 3 stows crossing your oversold line, and you're going to get your MACD in the right position, and you're going to get your same 5 or more ticks, your Lunreg 4, your HMA color change. But what do you notice is the difference? What is the difference between this strategy and when you're right side of the edge like this, as if this was live, this looks exactly the same as this over here. Okay, when you actually start the move, they actually look exactly the same. So this is the big problem that we run into with just basic charting packages, is that the indicators, the technical indicators, can only tell you so much. So what Barbara Cohen has done with her partner is they've quantified the rules of the strategies as they are designed, as she designed them, and they've transferred that information in a very sophisticated way, but a simple way using the Segredo. So as you can see here, if you look at the same entry, right, we're going to see, let's take this first entry here. When we're dealing with a retracement, we call this a retracement, you're going to see, or a counter trend, I should say, you're going to see that the Segredo is going to line up with your green number 1, with a green candle, with the yellow bar, with a green number 1 also. The fact that the color bar matches the color of the number represents that majority of the traders, okay, majority of the traders are trading in that direction. There's strong agreement. If you see that the color of the number does not match the color of the candle, so we've got a green bar with a red number, okay, that represents what we call Christmas, because the color Christmas is red and green. And when you see that, that represents that only a handful of traders are going long, and the rest of them are going short. So therefore, we have indecision in the market. So things are either flattening out or changing. There's not enough agreement for you to take the trade. And also, if you see that it doesn't match the bottom, as you can see here, the bottom is red on red, whereas the top is green, so some traders are starting to go long and the rest are going short, that kind of tells you that your downtrend is now petering out. So you don't want to continue lower and continue short trading. It's time to exit if you are in this downtrend. Okay, so what we're looking for, remember, dealing with reversals or counter trading, we're mainly going to be trading on the yellow and the blue bars of the oscillator. The blue bars represent we're going short, we're changing direction to go short, and the yellow bars represent we're going long, we're changing direction to go long. So for there to be strong agreement, the yellow bars must have green numbers. And for the to go short, the blue bars must have red numbers. If the colors are not in sync, like let's take it back a little bit, then you know that there isn't enough agreement, and you should wait for things to develop. So we go back here. As you can see here, we're starting to go long with the yellow bars. However, the numbers are red on the bottom. So it's not time to enter your long trade until you see the numbers have turned to green, matching the direction that the yellow color represents, which is long. So it's very important that you look for the color combination associated with the bar direction. They must be in alignment. Okay, and the same here. If you look at these blue bars, the blue bars represent that the market is getting, the uptrend is petering out. The market is getting ready to change direction. However, there's still some green momentum left. So these green numbers represent these green candles here. There's still some traders trading long, even though the underlying direction of the market is getting ready to change. So we have some contradiction here. Not enough traders in a specific direction. Okay, so it's neither long nor short, so you shouldn't be trading either direction. You have to wait for when you see the red numbers come in, that is your time for entry. Very important that you understand it. Is anybody confused about that before I move on to the next thing? Sometimes the numbers in the bars change color. That is correct. Sometimes it'll start out green and then turn red, and vice versa. Sometimes it'll start out being a number one and end up being another number one, and end up being another number one, and then eventually go to number two. It just means it's a slow start. So we're going to be looking at those issues and how to find the more high probability entries with specific alignment. So I will answer that problem for you, address that problem. So let's do this. We're going to do this on the replay because I've already downloaded the replay because I prefer to show you real time, and we're going to address what is the problem between the difference between what we call a retracement and what we call a reversal. Because technically, using a basic charting, they both look the same, right side of the edge. However, one is what we call our scalping trade, the retracement. You're only going to get 3 ticks or less inside of a 5-tick spread, usually. Now, gold and crude oil, you sometimes can get away with a few more because there's a lot of volume in these bars. So they're bigger bars, mean you can steal more ticks. In markets like natural gas, the euro, they're not great counter trending markets because there's not a lot of volume on the counter trend. The more trendy markets, more volume on the trend. So hence, most of the time you're only going to be getting 3 ticks out of it. So it's best to try to do your counter trending in gold, crude oil, Russell, S&P 500, and keep your trending to the currencies and markets like natural gas. That'll help your consistency a lot. So what we want to define is what's the difference between a retracement and how come we can get more price action. How can we predict this cross? Because as you can see here, the price action immediately, because there's so few people involved in this direction, as soon as it hits the next barrier, which is the 13 EMA, it's not able to sustain. The barrier is too much resistance, and the market continues. There's too much momentum, still trading short. And so we want to be able to quantify this and be able to recognize it at the point of entry. So let's see if we can identify this with our replay. And we'll highlight what we need to look for. So there is instructions on how to download the replay in your FAQ in the Shadow Trader Self-Paced program. And there are additional videos that you can watch through the Self-Paced program on if you want to revise the information that I'm covering tonight. So feel free to do that. Now, Please note that when you do download the day's activity, following the instructions, a lot of times people still get confused. They say it's not working and they've missed a couple of steps that they're not sure. So I'm going to go through a couple things that you want to watch for. Sorry, just bear with me 1 second here. Trying to find my notes. The first thing you want to look for when you set it up is you want to make sure that the from box is the actual date that you downloaded, because especially if you've downloaded a lot of dates previously, it's going to go to the earliest date that you download. So a lot of people say, oh, my chart's not working, but they haven't recognized that the from box is on the wrong date. So make sure you do that, and also set it at the specific time you want to start trading by right-clicking and selecting go to and then type in the time. And if once you've downloaded too many dates, please be sure to start erasing them, because it'll use up all your memory. And there is instructions on how to erase previous downloads in the members download link in the on the Shadow Traders website. So just go to members download and you'll see a PDF in there with instructions called cleaning your replay. Okay? So let's get started here. So the first thing we're going to look for is we're going to go ahead and we're going to trade our counter trend following our counter trend rules. So go ahead and push play here. So as you can see, we've got the circle with the dot that's coming already, and it's confirmed with an asterisk by giving us our confirmed low. And we've got the long wick and tail. We've got the 5 or more ticks before we hit the 13. So we've got a lot of spread, a lot of divergence. And we've also got the Linreg 4, the brown Linreg, giving us a nice sharp V. And the HMA color hasn't changed in this case. You don't always need it for scalping. But what you can do, you can either wait for the HMA to change color, or as long as you've got these main top 4 points here, you can go ahead and scalp before the spread has been closed, the divergence has been closed with the next bar coming in. So as you can see here, if you're just scalping your 1 minute timing, you don't always need the HMA color change. And as you can see, look, I've gotten my 3 ticks from the middle of the bar to the top of the bar before the next bar even comes in. Especially in markets like gold and crude oil, it's safe to be able to do that and do that consistently. So there's our scalping trade. Now watch what happens. I'm going to move this out the way for a second. If we look at our Segredo, if we go ahead and we match up the times here for a second, just so we can actually look at this. Now instead I'm using the Segredo static chart, but I just want you to get the connect certain dots here. So just follow along with me here. You can see at 8:01, okay, at 8:01 we have a green number 1, green bar with the yellow at the bottom. Okay, so it's confirming that I've entered on the right bar. Notice that the HMA has now changed color. The other nice thing about the Segredos you can see is that the HMA actually changes color sooner than your Ninja HMAs. See the HMAs just change color on your Ninja on a bar later, and I've already gotten my 3 ticks. So the Segredo definitely has an edge using the HMA, because if you're not sure whether this is the right bar to enter, if you see that your HMA is already changed using your Segredo, you can go ahead and take the trade. But most importantly, you've got green on green, number 1, with the yellow bar. And that's the timing you're looking for if you're just going to go steal 3 ticks. Now, the question of the day is, how do you know that it's a retracement at this particular junction in time? And one of the things we can look at, if you just want to be safe, is that the fact, now I've gone a little ahead here, the fact that at the point of entry here, you can see that the HMA is quite a distance from the 13 EMA. That's one big clue you do want to pay attention to. Notice that the gray line here is actually our green 13 EMA, and at this particular point, our HMA is not crossing it. Okay, so that tells us that that's pretty much a retracement. Also, you can see here that our 13 is still quite far away. But sometimes, especially with volatile markets like crude oil and gold, because there's so much price action even on a basic scalping retracement trade, because the bars are so big, it can cause a cross of the HMA. So you can't always rely from a 1 minute view that it crosses or doesn't cross. The HMA crosses the 13 or doesn't cross to tell you whether it's a reversal or not. That's not always a guarantee. So we need to look at something else. So let's take a look at the next trade. Let me see a couple of questions here. For crude oil, I better have some super duper sharp entries and exits, right? Yes, crude oil is really volatile, you know, because their bars are so, look, I mean, look at these bars here on gold, and you'll see, you know, one bar can drop 20, 30 ticks. So you better have a, you know, pretty wide stop and a lot of tolerance of risk. Otherwise, you better be, you know, real razor sharp on your entries. So this, you know, pay attention to what I'm saying tonight, because this will definitely help you with crude oil. Would you recommend gold or crude oil for newbies? We're still figuring it out. I wouldn't, if you're a let's put it this way, if you're only going to do a few trades, you know, a couple of trades, and you really got your entry down to a science and you replayed it, then go ahead and trade it. But if you're one of those nervous, hesitant traders that no matter how many times you go on the replay, you've lost a lot of money, you're still going to think about it once, twice, 3 times before you pull the trigger, then you have no business trading in gold and crude oil. You cannot hesitate in those markets. As soon as you see the setup, you got to go for it. You know, it's kind of like all or nothing. And that's the reason what makes Barbara so good at those markets, is because she's done it, her strategy so many times over. You know, she practically dreams about it, that that she doesn't hesitate. And that's the most detrimental thing with volatile markets, is it's not so much the strategy or the risk or the volatility, it's the hesitancy. You know, scalping, you're trading in such a tight window, you can't afford to hesitate, and that's the real issue there. So it's all about how much you practice, how confident you are, you know, how well do you know your strategy and your timing, okay, and how much baggage are you carrying from your previous trading. So that's why I tend to shift people to the trend, because if you're trading on the trend, even if you're getting a bar late, if you're just hanging there long enough, it's going to fill you anyway. But if you're trading on the counter trend, if you watch here what's happening next, you know, you get your timing slightly wrong, as you'll see in just a second here. You know, this thing's coming down, and it's going to, if you hesitate just a bar late, you're going to get stopped out, and that's the problem with crude oil and gold. Russell, TF is easier, yes, and the nice thing about the Russell, T is in Tom, F is in Frank, if you want to practice counter trending as a novice, I would rather you trade in a market like Russell. The only thing is you don't get the pivots there, but at least you get you can use your Segredo with that as well. The nice thing about the Russell is the margin is only $500 as opposed to $1,000 with crude oil and gold. Okay, so here you can see we could have taken a few more ticks. You know, we could have stuck with the Segredo here and traded all the way to number 4 and taken slightly more than 3 ticks. And that's the nice thing about gold and crude oil, is that it's definitely going to give you more than 3 ticks on their basic scalping trades. But notice here it does turn around, and you can see that the market continues with the overall direction. Now I'm going to speed this up real quick, and we're going to move on to the next trade because we're going to compare the differences, right? That's what we're looking to do here. And how is the Segredo going to help us with these differences? Now you notice as the momentum's coming in, this is the trickiest part, is gauging when that momentum is really over and the trend is really fizzling out. Now, here's an interesting one. As you can see, here's a little gap trade at between 8:10 and 8:14, right? We had another little retracement trade. Now, why, using the Segredo and using Ninja, why would you not take that trade? Who can tell me? Why would you not take that trade as opposed to the one previously? You know, I could have jumped in there and taken 3 ticks, but why would I rule out that trade at 8:13 as opposed to the one at 8 o'clock? What would help me rule that one out? Oh, Audrey, you're trading the Russell at the wrong time. You don't want to trade the Russell at 6 a.m. to 7:30. The Russell will only trade when the S&P 500 opens. So you must trade that from 8 o'clock in the morning to, 3:30 in the afternoon. That's the only time you can trade the Russell. So why would you not trade that trade at 8:10? Somebody said Christmas, very good. HMA, not so much HMA. No doji. We don't necessarily need a doji, particularly. It's not always going to show up. As you can see, there was no dojis here. We had long wicks, long tails, but we still had some body to the candles. Xmas all over the place. Close the 13, yes. So the main, very good answers from you. The main reason is we're too tight. There isn't really enough spread. Okay. But most importantly, if you look at your Segredo, I want you to notice that there's Christmas. Okay? And here's the other factor. Notice on my previous entry, I got in on the number 1. Very important, getting in on the number 1, number 2. Be very careful trading on a 1-minute chart, trying to anticipate the change of direction by jumping in on 7 or 8. You do not want to, especially on a 1-minute chart. You can do that on a higher time frame, okay, but not a 1-minute chart. You do not want to be anticipating the change of direction by trying to get in early and jumping in on a 7 or 8, because many times 8 can actually have a lot more momentum left over. You can get a Christmas 7 and 8 can come in short. And, here's a Christmas 7 and an 8 can come in going red again. So you want to be very careful jumping in on 7, anticipating a counter trend. So in the fact that it's Christmas, we have a red number with a green bar, and you see at the bottom here we have a red number with a yellow bar. So it's all the wrong colors. It's completely out of sync. Says there's not enough traders going long. Some are going short and some are going long. Contradiction. And because the previous trend is short, there's more traders going short, so you want to stay out of it. Is that clear? So let's continue here. Does the number equal momentum on the Segredo? Yes, the number definitely has a factor in when we think of momentum on the Segredo. We think of where we are on the cycle. Are we at the beginning of the cycle, the middle of the cycle, or the end of the cycle where the fizzle happens? So, and the cycle we're referring to is the number 1 through 8. Now, it doesn't always make it to 8. Sometimes it can fizzle at 4, as you can see here. So you want to use the fact that you either change into Christmas colors or you've reached number 7 to show you the fizzle factor, to show you that we've lost momentum in that direction, time to get out. So, but if it does happen to make it to 8, you want to be out by 7. Okay, so it's either the first sign of Christmas or the very latest, you want to be out by 7. And that's what's showing you the the momentum versus the lack of momentum. Also, the size of the bar is a huge part of the momentum factor. You can see the length of the bars at the bottom here with the histogram showing you how strong the trend is. Okay, so let's take a look at the next trade coming up. Let me just speed it up here. We're not quite there yet. Okay, so now here's another nice little retracement trade. You could have, if you got your timing really acute, you could have jumped in. Being that it's gold, you can see you definitely would have made 3 ticks. So sometimes in volatile markets, you can still steal 3 ticks in a very tight window. It doesn't have to be a whole lot of spread, because there's a lot of volume in a single candle in gold and crude oil. And notice on this particular occasion, there was no room for hesitancy, but you did get your confirming green number with your green bar, and at the bottom you got your green with your yellow bar. So that's enough to jump in and say you've got your stows at the bottom here, you got your MACD in the right place to jump in and just scalp 3 ticks, paying attention to where the resistance point is. And you can also look at your turquoise fractal here to help you see the resistance point. The turquoise represents resistance. So you're only trading to where that line is. But again, that's a retracement trade. So what we're looking for now is the one that's going to give us the majority of ticks, which is the reversal. So you can see momentum is still continuing on the trend. Still continuing. Okay, so now we're starting again here at 828. The stows are now at the bottom, moving up. MACD's in the right place. And we're starting with a new number 1. Okay, a new number 1. Now, in this particular case, you have a choice. You can either enter here at the first sign of number 1 because you got green on green. But notice the difference. What's the difference between this number 1 and the previous number 1 up here? Who can see what is the difference between this trade that I did on the number 1 and the trade that I'm facing now on the number 1? See, it's candle number 829, and here we are at 829. What's the difference? Who can tell me? You can see we've got the HMA change, we've got the Linrig 4, so we've got all the basic rules except for one factor on our rule list. What's the one factor that stands out to you? Very good. Candle is touching the 13 EMA. There's no spread. Okay? However, in this particular case, the odds are still in our favor. Why? Only in this particular case. Because the trend has been going for a while. As you can see, we've had several attempts to counter trend. At some point, the trend has to fizzle, and we do have to reverse. It's inevitable. Okay? Markets don't just stay in one direction all day long. I mean, you do have an overall direction, a sort of a one-day direction, one direction certain days of the week, but it still moves in stair steps. So in this particular case, you have two choices. You can either say, well, I'm not going to gamble with the fact that we're already on resistance, okay, because I could take some heat. So I could wait for a number 2 to come in. And if you see that your number 2 is in Christmas, then you could wait till you see a real green on green, which is in this case over here. But I'm going to go ahead just to show you. Let's look at how much risk we're really going to face if this is truly a reversal. So we're going to go ahead and place our entry here. Okay. And we're going to go in on that green number 1. And I like to go, when I do reversals as opposed to retracement, I like to go in with 2 contracts and take 3 ticks off profit right off the as the price action's moving. As you can see there, we've taken our 3 ticks as it's squeezing through here. And then I like to scale out with the second position. So now, because I've done that, and you can do this with a $2,500 account because you're not in the market for a very long time with 2 contracts. You're only actually risking 1 contract for any real length of time. So the risk is minimal. So now what I'm gauging is, here we are, we're coming to the 830 candle. We had some red there. I'm gauging how much risk I'm really facing. And because I've already taken profit, I'm more inclined to ride things out. So now we've got some Christmas coming in. But notice when you look at this Christmas on top, what do you see at the bottom? The bottom on the Segredo is actually a green number with a yellow bar. So now the bottom is telling me, wow, the direction is pretty much secure. There's lots of traders going long. I'm just running into some resistance. As you can see, the Christmas on top and the green and green at the bottom, the Christmas on top pretty much tells me, look, we're running into the 13 EMA. We're having some issues getting through that resistance. They've got to come in with some more price action. So let's take a look here. So for the most part, we're down probably about 4 or 5 ticks here. And in this particular case, because it's gold, this is a pretty common that you can be 4 or 5 ticks. Now, I could have got in slightly earlier on this particular bar. Notice I caught the high of the bar in this particular example, but a lot of times you could have gotten in a little earlier on the bar and you won't have to take this much resistance, especially in markets like gold and crude oil. So you can expect this on counter trending, and for you, you have to decide how much risk you're really willing to take. So we're going to look at a couple of things here in a minute. So watch what happens next. What candle are we on? We're at 832 now. I think this is the big 8. Oh, here's the 832. Here's the big 832 candle. And also notice that our HMA is pretty much stayed green the whole time here. It's only changed on the Segredo on this 1 bar. But our HMA is pretty much holding secure. Now watch what happens next. Just speed it up here. Okay, now notice on your Ninja, the first thing you should be looking for is that your brown fractals just come in. Can you see that? When that brown fractal comes in like this on a reversal, especially with your Stows and your MACD in alignment, what that says is we're changing direction. That is actually your reversal fractal. It says we're going into the trend. Okay? We hit the red fractal says that we're closing the gap. That's all that says. But so basically it says we hit a support point, we're closing the gap. We hit a support point, we're closing the gap. That's all the red fractal says. But as soon as you see the brown fractal come in, it now cancels the resistance fractal. Can you see there's your turquoise resistance fractal? This is where people get confused. They go, well, can I go long because of the resistance fractal? If you see the brown fractal come in, you've now got what's called a fractal cross. Can you see the trajectory of them? They cross. And that says something significant is happening or changing direction. So therefore, you can ignore that resistance fractal. That resistance fractal is from the earlier previous price action. It is now null and void from this particular point. So this cancels that resistance fractal. Now you can see, you'll notice that your green number 1 at the bottom, it's matching, is coming in. So as that candle comes in, which is at 8:33, I could decide to enter here instead of where I entered before. So it's very important that you pay attention to your resistance factors to help you minimize that risk factor. Had I got in a little earlier, before we hit the resistance point, I could have minimized some of that risk. Okay, and additionally, I can enter a little later, you know, at this point here, at the 8:33, and you'll see now the price action continues going from a yellow to a green bar. As soon as you see the green bar come in on the histogram of the Segredo, you now know that you're basically on the trend. You're on the developing trend. That's what the yellow to green means, or the blue to red. Basically means we're no longer in the gap part now. We're no longer on the counter trend, but we're actually on the trend. However, I have to pause this for a second, and I have to explain one very important rule so that you understand the price action and how it's going to behave. The most important rule that you need to understand is, even though we have the green bar on the Segredo saying that we're on the trend, no longer on the gap part, because remember, reversals are a marriage between the gap and the developing trend. So now we're on the trendy part. Is one very important rule. As I've always said, when it comes to trend trading, you must have 3 or more moving averages back in the direction of that 13. So it must be the 13 plus the 20 plus another color. And that can be the magenta, it could be the blue, or it could be the red moving average. And in this scenario, do we see a third moving average back in this 13? At this particular point, they're just starting to cross. So we only have the 13 and the 20, right? Is that clear? So because of that factor, you have to know that this is a counter trend, right? This is a developing trend. This is not a true trend. If we look at this cross up here, as you can see, as soon as it crossed and it cleared the other moving averages, can you see that this cross at the top represents the trend? So we could say that this is a reversal here at 7:35, and if we look at our Segredo at, let's take it back, here at 7:35, we can see we go from blue, even though the blue was so short-lived there because it was such a tight reversal, nonetheless we went from blue to red. So this reversal is on the trend per the definition of a trend. So sometimes you're going to get reversals that are on the trend. You can see it went to red very quickly, and it was going in majority of the moving averages. And sometimes you're going to get a reversal that is on the counter trend, where there's no moving averages. So it's very important that you understand the difference between the two. Why? Because one's going to give you less risk and a whole lot more price action, and the other one's going to be a little bit of a bumpy ride, as we've just found out. A little bit of a bumpy ride. So the timing is very important where you enter. See, up here, you can enter at risk and just ride it through with confidence. Here, if you enter at risk, expect some risk. Expect that little bumpy ride. And it's going to take a longer to get to where it needs to go, to get through that risk. those barriers. The other thing that you need to notice is that in this particular position, because you're on the counter trend, you need to pay attention to the next barrier that's coming up. And the next barrier in this case is the 50 SMA. Because remember, this represents only a handful of traders trading long, whereas this represents the majority of the traders trading short. So they're likely to get through plow right through the barriers with no problem. No problem. Plow right through them with no problem. Because the majority of traders are trading that direction based on the configuration, the alignment of those moving averages clustered together. Notice that your 100 is crossing your 200. This whole timing of the cycle, in the overall cycle, it's no problem. But here, it's a problem. So when you're trading your price action and you're looking for how much you're going to grab out of your trend and you're scaling on your second position, you want to look for the timing of getting out just before that 50 SMA. So 28.6. So I could almost put my exit point, if I want to be, somewhere like 28.5. So now you have a definite entry and you have a definite exit. So I can either do something like that, or I can use my Segredo and say I'm going to get out at the number 7 or the first sign of Christmas. Either or. Whichever shows up first. It's up to me. Okay? So 7 or Christmas. So let's see what happens, how this develops. And I'll speed it up for you a little bit. So there's a momentum coming in. And here we are on candle 835. Let's find 835. So on the Segredo 835, we're actually at candle number 3. So we still got a little bit of ways to go. Okay, 835. So we had a little flash of Christmas. Now when I'm on candle number 3 and I get a flash of Christmas like this, and I know that we're reversing, you see the green on green at the bottom? I'm not always going to get out if it's just getting going. So you don't always want to get out on the first flash of Christmas, like this number 2 here. The 2 or the 3. If you see Christmas on the top, but the bottom is the histogram is showing green numbers with green bars, you don't want to get out necessarily at the first sign of Christmas. But as you're progressing closer to 6 or 7 and you start to see Christmas, then you know it's time to get out. That's where you'll know it's time to get out. So our Christmas shows up at 8:38, and which is on this candle here, 8:38. So I could actually didn't actually make it all the way to my price point. Oops, I missed my exit. Sorry, I blew that one for you because I had it at high speed here. Sorry. Anyways, 8:38. I missed my exit point. It's going to spike through a little bit more here. But 8:38, which is the number 6, is what I wanted to get out on. Okay? That's the candle I wanted to get out on. So technically, you can make $200 on one trade very, very easily with a reversal, provided you time it right. And if you happen to take the reversals on the trend, those are going to be a lot smoother than the reversals on the counter trend. But that's what you're really looking for. Now, oh, I'm still in, sorry. Oh, I forgot I put a third contract on. That's right. So let's take a look at something. So indeed, we did stop at the 50 SMA because there's no third moving average. So 50 SMA is going to be a very big barrier for us. And getting out of number 6 would have been the smartest decision to make. Okay, right at the 50. Now, the one thing you want to look for, the moving averages have fanned out more. The one thing you want to look for is this. Let's take a look at this. If we're using our 1 minute segredo, what's the difference? Okay, between this retracement of 3 ticks we took and this $200 trade that we did here? What's the difference between that? And if we're using our segredo though, let's take it back here. So the first trade is all the way up here. Okay, so here we have our number 1, green on green at 8:01. And then if we move along here at 8:30, we have our green on green number 1, or over here, green on green number 1. So can you see, per the 1 minute chart, there really is no difference at all. Real time, they look exactly the same, right side of the edge. I could have gotten in here, looks exactly the same as this. Could have gone in here. Okay, this one crossed already, so that's kind of good. But they basically look the same. So on a 1 minute chart, you cannot really tell, segredo or ninja, you cannot really tell what's a retracement and what's a reversal when you're real time in the actual entry point. So who can tell me, what should we be looking for to help us define whether it's a reversal or a retracement? If it's going to give you $200 or is it going to give you 3 ticks? What can we use to help us define that? Because obviously what we're looking at is limited in view, can only tell us so much. Remember, certain time frames, certain indicators can only tell you so much information. Excellent. So everybody who's been in my previous class has been paying attention, and you are absolutely correct. The higher time frame, remember what I said? And remember, reversals are your developing trends. The biggest rule for trending, the biggest rule for trending is that you must have 2 or more time frames in sync, and I call that matchy-matchy. They must be in sync. So you need, if you want to see the trend, you cannot see it by just looking at a 1 minute chart. You can't see it. Things change too quickly, and by the time you see it, it's all too late. It's all after the fact. So to get the predicting, you have to pull up a second time frame. And this is where the segredo really shines. It makes it real crystal. Because if we go to this entry point here at 8:01, where it could have reversed, maybe because the stows were at the bottom, everything was lined up. And we go here to our 8:01 entry per the 1 minute chart. Okay, look, even our HMA was started to cross a little bit. And sometimes that HMA will cross if it's a 1 minute chart, if there's lots of volume. But notice that our 30 never crossed here, according to our ninja, right? So sometimes the segredo HMA will cross because it has a slight edge over the ninja. But if we look at our 3 minute chart at 8:01, what do you see? Oops, we want to do that. Look into. Oh, sorry. What do you see at 8:01? You see Christmas, right? You see just a flash in the pan, just some flash of green with a red number. Look how far the HMA, look at the distance of the HMA in relation to the 13, your gray line, your 13 EMA. That's quite a lot of spread. That's a pretty strong trend. notice, look at your red bars at the bottom here, your red number. Granted you have a 0. Now the 0 just means that the market's thinking about it. It means it's come to an end of a cycle and it's trying to decide, do we start the new cycle with your number 1 going long, or do we start it going continuing with the trend short? So 0 doesn't mean we're changing direction, guys. A 0 just means we're thinking about it and we're continuing, because as you can see here on this 0 we continued, and sometimes on the 0 you can actually change direction. Let's see if I can find a 0 for you here. Here's a 0. So here we completed to cycle number 8, got to a 0, and we actually changed direction. So it just simply means we finished our number 8 cycle and we're thinking about it. We're just trying to count more trades to see if we're going to continue with the trend or we're going to change direction. So 0 just simply means we're calculating, we're thinking about it. So in this particular case, we got a 0, but we still had these long red bars. So it was a green 0 saying we have some traders trying to go long here, but we're still pretty much a strong trend short. And our HMA is telling us that along with the bars. So I call this a flash in the pan. It's just a retracement. And that information, if you line that information up next to your 1-minute chart, you can see that they're not in sync. There's no matchy-matchy here. This is primarily red, okay? This is yellow. This is green Christmas stuff. Your HMA is red, and this is green. So it's not matchy-matchy. One chart does not look like the other, so they're not in sync. Can you see that? How do we get the tooltip to be a bit farther away from out of the way? You can't. You can either remove the tooltip by checking the box at the top, or you're stuck with it. Unfortunately, you can't move it out the way. What you can do is put your cursor higher up. See, if you put your cursor higher up, so you just put the line on the candle, then you can actually see the candle. So just move your cursor. If you move your cursor closer to the candle, the box is going to be on top of the candle. So let's take a look at the next trade that we did here, the reversal. Let's compare it with the 8:30 trade and see what the 3-minute tells us. So we'll move our 1-minute forward. As you can see, there pretty much looks the same. And now, if we go to our 3-minute chart at 8:30, oops, what do you see now? You see that now we have more of an alignment, because now we've got the yellow bar coming in with our Christmas number 7 green, and we're going to the next bar, we're turning our HMA's change color. So this is the only time that I said, remember I made the statement earlier that you, on a 1-minute chart, it's not a good idea to anticipate the new direction by jumping in on the 7 or 8. But on a higher time frame, if your 1-minute is in sync, if it's green on green 1-1, as you see here, and you see that there's a yellow bar 7 or 8 giving you Christmas on top with your HMA green, you can take the trade based on your 3-minute chart, because that yellow is strong enough and the summary of the 3-minute value is giving you enough traders in agreement with that direction. Now, if you want to wait a little longer and wait for the 1 to come in, you'll miss some price action, but at least you'll get in when things really align as well. So, but I wouldn't, and remember, this is a static chart, so you'll probably find a lot of times these numbers will actually flash green. So as long as you see that the yellows come in, what that says is that the 3-minute and the 1-minute, the trend is now fizzled, and the counter trend is well in its way, on the way. Okay, so this alignment is telling me, remember, the 3-minute gap trade is coming in. It's telling me A gap trade on a higher time frame causes a cross on the lower time frame. And now when you look at it from this perspective, you can see how much of a flash in the pan these previous retracements were. They weren't really anything significant, but something like this looks more significant, which gives us that reversal. What about go out farther, say to a 10-minute chart? No, I wouldn't, not for counter trending, because counter trending is so finite, and you're dealing with, you know, a shorter window, especially when you're dealing with the lack of the third moving average. Okay, this is a true counter trend. Then you don't want to go out too far. You don't want to go out too far. You want a tighter view of the market. When you're looking for more trending information, then you can go out really far. Like, let's say I wanted to know the overall direction of the market. If I scrunch my gold chart up, you can see that the overall direction of the market is down, and I can pull up things. You can go as high as, let's do this. You can pull up the gold daily chart and look at the daily chart. The daily chart shows you that we completed our cycle number 8. We already had our Christmas zero, and we're on a number 1 with a red HMA on the daily chart. So the daily chart says that pretty much gold is going to be shorting for the most part of today, and any direction, any trading going long is going to be pretty much short-lived. So if you're looking for your trending information, you can go as far out as the daily chart. But for something that is more scalping and tight window, you want to keep it to your lower time frames. That's what they're there for. It's a real scalper's view. Otherwise, what will happen is you'll look for a certain alignment. Let me pull up my 15-minute chart, see if I can find that on the Segredo here. Sorry, let me just pull up a 15-minute chart. That's a good question. Okay, if you look at just Segredo on your 15-minute chart, and we were looking at 8:30 in the morning, you can see we've got some green candles, but we're still very much red. So when you look at that, that's not gonna tell you you have a reversal. It's not gonna tell you any information whatsoever. If anything, it's gonna confuse you, because you're gonna think, oh well, you know, maybe I can't take this reversal because the downtrend is short. Because remember, there's not enough traders. If once the yellow part comes in on a 15-minute chart, then the market has truly changed direction. Then the trend is now really a switch from a bearish to a bullish market. So that's not going to help you make $200. If anything, it's going to confuse you. So when you deal with higher time frames, we're talking about trending, and I have covered that before, but I will circle back around to that, and I'll cover that in my trending class. Okay, so let's look for another example here. Let's compare another example so that you can get a more to go on. Let's go to this one here. Oh, sorry. Okay, so here we are. And you can just move these scroll bars on the bottom here on the Segredo chart to move it along as well. So here we are. We're coming on. As you can see, we got another downtrend. Stows are approaching the bottom. I'm going to push play here. And as you can see, again, we've got our counter trend criteria appearing. Got our long wick. We've got our Lundberg force giving us our V, the asterisks, and you will see that the yellow's coming in with the green number 1 on candle number 31. So I can go in ahead again and trade for my 3 ticks. Notice I got enough spread here before we hit the 13. And as my green on green comes in and my 1231, yellow on the bottom with a green number, green candle with a green bar, HMA is green. And again, the Segredo HMA turns nice and early, gives you that edge over the ninja. And there you can see very successfully made my 3 ticks very quick, easy, $30. You can do that as many times you want throughout the day, as long as you see your 1 minute lining up with your ninja indicators to tell you your trend is trying to change direction. However, how do we know that this is a retracement and not a reversal? How do we know that? Because if we're going to use things like our stow alignment or our MACD, it's not always going to make it clear, because look, there's your stows are beautifully crossing. Okay, whoops, beautifully crossing, pointing up from the oversold information, and your MACD is in the right position. Okay, it's below your center line. It's curving nicely. Your HMA is green. Your 13 is flattening out. So everything looks like the ingredients are there for it to reverse. Even your Segredos, your HMA is crossing. So everything is there for you to reverse. However, watch what happens. If you're slightly hesitant on this trade, okay, if you hem in your heart too long, you can run into a problem. And as you can see, even though we crossed with some green stuff, we pretty much flattened out. And if you hem in your heart too long, thinking, oh, it's going to go, it's going to go, you can see that the market changes on you. And when you see your HMA turn red and you see number 1s coming in or your blue bars coming in, you know you should just be out the trade. Do not, especially in markets like gold and crude oil, do not ride out a change in direction. Do not ride it out. You should rather just exit the trade and wait for a better entry. Okay, if you happen to make one of these mistakes. Now, the good news about gold and crude oil is chances are, because the bars are so big, you're going to get your 3 ticks before any real damage is done. You have to really be, a slow coach on your entries to not get 3 ticks. You really have to be a real hesitant trader. In markets like euro and natural gas, you can't afford to hesitate. You will get burned because there isn't more than 3 ticks on the counter trends anyway. In something like gold, there's definitely more than 3 ticks. Now, the sad thing about gold and crude oil is if you do happen to hesitate and think about it too much, and you get in here, and then you experience what I call the deer in the headlights scenario, where you're not sure and you stick there just one more bar. You say, well, I'll just wait one more bar, and you don't know if you should or shouldn't get out. Maybe it's just resistance. Maybe it will go to the 50, and you're looking at things like the fractal cross and all these things. All the ingredients were there for a reversal. If you wait too long, you're going to get caught in one of these. Whammo. 40 ticks, it's going to drop. Bang. It's going to hit your stop. And for those who move their stop, you're going to blow up your account. And this is how traders blow up their accounts. Okay. So if you're going to trade in markets like crude oil and gold, You need to have a tighter risk model. You need to say, when X shows up, I'm out. Or put your stop at a certain place and just take the hit, especially on counter trends. Okay, more people blow up their accounts on counter trend because they don't know a reversal from a retracement, and they hem and they haw too long. You're going to counter trend like this into the trend, into the moving averages. You better get your timing down to sign, and this is where Segredo is going to help you. It's very different when you're counter trending on the trend, when you're going with the moving averages, because then you can write it out. Chances are it's going to fill you, but not on the counter trend. This is where people blow up their accounts. They don't understand the difference between the two because they just see a cross as a cross. They're not looking at all the factors. And especially when you've been trading for quite some time, you get tired. You get hypnotized by the market. It's a very common problem. And you develop bad habits. So watch your Segredo. If you see your Segredo change to Christmas, your HMA's gone red, you got red number ones coming in, you're out the trade. But most importantly, let's see if we can expand our view and look at the real clue that's going to help us sort this problem out. And the real clue is having a second time frame up so that you can see a wider view of the trend. So our entry was at 1231. And what do we see at 1231? What do we see? Okay, here we go, 1230, 1231. Look at our oscillator on the Segredo, the bars at the bottom, the histogram. Can you see that they're very big, very strong, and they're red? Notice that we're on in number 7, 6 and 7. And we have some Christmas. But again, look at the divergence between the HMA and the 13. Look at the trajectory of that 13. It's very, very strong. So just because we have some Christmas here doesn't mean that the market's really ready to change from bearish to bullish. It's just the speed bump in the road. They just hit some support level, that's all. And you can see with the histogram still red. So now you know right away, if you see this, your 3-minute is your driver. A lot of people think, oh, your 1 minute goes first, your 3-minute is laggy, then your 3-minute follows. No, it's the other way around. That's why I put the 3-minute, because we in the Western world read from left to right. Left side is more important than the right side. Okay, this is the beginning and this is the end. So if this trend trade, this is defining your trend, okay, this is the beginning, this is the direction of the market. This is the important information. This is just showing you the noise in between. The 1 minute is not telling you the direction of the market. It is not saying the market is going up. It cannot tell you the future. It is too close. It can only show you the magnified view of this. And this is the biggest confusion. It's a paradigm shift that traders make, and why they blow up their accounts based on the 1 minute information. They always put too much importance on the 1 minute chart for trending directions. And you need to know the direction of the trend if you're going to counter trend. Because if you get your timing wrong, you're going to blow up your account. So you have to see the trend, always. Whether you're trading on the trend or whether you're trading on the counter trend, you have to see the trend. And so this is the reason I use the Segredo. And I use this trend information. So here is the information that's telling you we're on the downtrend still. We are not ready to reverse. This is a retracement. You need to be out at the next barrier, which is your resistance point. Yes, you can't see the trees through the forest. You can't see the forest through the trees. That's what your 1 minute does to you. Okay. Now you need your 1 minute because it helps you to, especially for scalping, it helps you to get that early enough entry in those tight windows of trading. So you need your 1 minute. You don't want to get in, at the after the party is over. So you need that for that finite entry. But you want to do it with an alignment, which is why the rule says you must have 2 or more time frames in sync if you want to trade the trend. When you're scalping 3 ticks, you don't need the 3-minute chart involved because you're only scalping 3 ticks. You just need to see green on green with your yellow bar, and you need to make sure that you're not on resistance already. You want to trade 2 resistance or 2 support. For scalping 3 ticks, you don't need that second time frame. However, if you want to get more than 3 ticks, you better make sure you're on the right point. So here we are at let's see if we can see what a reversal looks like. Okay, we've got a little bit of chop here. We have a little bit of a gap close here. And that's very typical of gold. As soon as you get these HFT bars come in, you can get strong gap closes of gold. So stealing 3 ticks on scalping to the 13 is very feasible in gold and crude oil, as long as you don't hesitate. You must see the circle with the dot, the Limerick 4 making the V, look for that spread, and then you're good to go. Okay, so now you can see we've got some, looks like we're continuing here with the counter and the stows are coming up very nicely. MACD's in the right place. But what I'm looking for is I'm looking for my green number 1. Notice I wouldn't have taken, why wouldn't I have taken this necessarily, this particular gap trade? Because A, it happened out of the blue. It's one of those spike candles, as opposed to this one here. Can you see that this one was clearly set up very nicely, worked very smoothly with no real franticness in the direction. And you can see that my Segredo gave me my green 101, whereas here we've got a lot of franticness. We've got the 8, then the 0, then the 1 is Christmas, the bottom has a red number, the top has a red number with a green bar. So this is all franticness. So you're not necessarily going to be jumping in this. So what we're looking for is the real green on green number 1 coming in at 1252. That's ideally what we're looking for here. Okay? So to avoid that franticness, you want to locate, are you trading on Christmas stuff or are you trading on the real alignment? So let's play it out here and we'll see here. So how did we do it before Segredo? That's why I don't counter trend. I just don't counter trend at all because I've taken a lot of hits. Every time I lose money, I'll tell you right now, it's always because I, you know, lost my common sense and decided to try a counter trend. So without the, that's why Barbara created the Segredo with a partner, because she got so sick of the what about this and what about that and these kinds of questions. So she said, here, just follow this, right? But still, it's not, it's not like you can just take every number 1 because, look, this number 1, you got whipsawed out of the market. This number 1, you would have gotten whipsawed here. So this number 1 down here, you would have gotten whipsawed. So you can't just trade number 1s blindly like it's your ATM machine. Goodness, if we had that, we'd charge $1 million and we'd all retire. So every indicator has its issues. So it's all about the alignment. It's the number 1 that's green on green or red on red. Within a lot, if you're focusing on a specific strategy, and tonight we're focusing on the reversal versus the retracement, then we're focusing on this alignment. So let's see here. We're going to make our entry. Do you need to look at the 50-minute too? No. No, we're not. Am I still sending emails for class details? Yes, you can email me. Definitely email me if you need details. But here we go. It's coming up in just a second here. As you can see, we're looking for candle number 1252. You know, and Barbara makes losing trades too on counter trends because that's the thing about a counter trend. She's not 100%. She goes, but it's a law of an average game. You know, it's how many winners, and she's got it down to a science. She really waits for a specific timing. She waits for that, you know, HMA to come in now. Before, she never used to use the HMA, so she used to get whipsawed a lot. And that's the risk factor of the counter trend. You know, you really got to be razor sharp with them. And that's why I tell people, if you have a lot of baggage and you've developed bad habits along the way, then you forget about counter trending. You really should only be considering trending. Or if you're going to do reversals, make sure you do it on the direction with all the moving averages. Don't bother even trying to do it against the moving averages. Okay, so here we are at 1252. So our number 1 has come in at 1252, and I've put my 2 contracts on as I normally do, taken my 3 ticks, because remember, we're trading on resistance here. We're on a little bit of resistance. Sometimes your reversals are going to be on resistance by the time your alignment comes in. It's just part of the reversal because the price has to go through the 13 to cross. The only time trading on resistance is really a problem is if it's a retracement. But if it's a reversal and it's really an alignment, you can afford to suffer a little resistance. You can afford. So you can see there's the resistance on candle number 1253. But look at the bottom. The bottom is green number with a yellow bar, green on green. And so the fact that we've got green on green here tells me the direction is going to stay true. Also, if you go here, you can see that we're already moved on to the yellow with our 3-minute chart. We've gone from Christmas at 1248 going into the number 4, and now we're on the yellow, and our HMA is changed to green. So with the fact that we've changed here, our green 3-minute is now in alignment with the yellow. The yellow's coming in is now in alignment with our 1-minute chart. You can see there's our fractal cross. The brown fractals come in. You've got a few asterisks along the way. So now we just have to gauge where do we want to get out. What is our exit point? Now the nice thing about reversals when directions change, and especially if you're using the 3-minute chart, is that it is the developing trend. And you will notice again we can get out where the 50 is, right? Or if Christmas or the number 7 or 8 show up. So now the nice thing about this is that sometimes if you're really trading the developing trend, you will see that we got in on the number 1. You may even cycle through 8. In this case, we got to 6, right? And then you'll see another cycle start. Why? Because if you look at your 3-minute chart, you're really trading your cycle per your 3-minute chart. So if you really want to capitalize on a true developing trend, you can actually trade it all the way to the 3-minute number 7, which is closer to or the sign of Christmas. So we'll just play by the rules and we'll trade it to 13:15. So I'll speed it up for you. So here we're bumping into a little bit of resistance there. It's got to get through that 20 SMA. So you got some Christmas coming in. So that's okay because look at the bottom. We've got yellow with the green numbers, and look at our 3-minute. Our 3-minute says we are good to go. We are green on green, number 2. The HMA is crossing. We are good to go. We just hit a little speed bump. So here we're coming up to the 50 SMA. This is usually a very good place to exit. Okay, in this particular case, I could go and steal a few more ticks. Notice it's squeezing all the way through, which will happen sometime. It's a very nice thing about the developing trend. And again, we're looking for that 6 and 7, which is at 13.15. Now, because we're so high up already, close to the 200, it's feasible for you to get out at the high, if you like, before it turns around. You can actually do that as well. You could say, oh, well, our 200 is at 1323.5. I want to get out just below that. It's very feasible. So you don't have to wait for it to actually drop and turn if you don't want to. So you can just get out at the high and take your profit. And that's how you capitalize on the gap trade into the developing trend. But again, what are we looking for? If we look at, notice here at 305, we're hit number 7. So if I look at this candle, here 304, we're out on 6. When you see a clear candle like that, that's the same as the 0. So the market's thinking about it. Something's happening here. It's changing. There's change going on. And then you got number 7 at 305. So I can already see the resistance factor. I can see the 100 there. I can see the 200s right close. Do I need the very, very last tick necessarily? No. Just take your profit while it's on the table and get out. You've got a lot of stuff going on telling you things are about to fizzle. The number one, the Segreta 1 minute's on a 6 going to a 7, and our 3 minutes on a number 4 going to Christmas. Okay, so you can, it's a very safe place to exit. Now, if you wanted to stay a little longer and ride it through the 200, that's another story. But you can see the overall direction is you're trading the meat and potatoes by balancing the 3 minute and the 1 minute. That's what I want you to see for the most part. Then go fishing. Exactly. Now look, guys, do you need a whole lot of hacking in the jungle, trying to steal 2 ticks, trying to predict the trajectories, trying to see is there a cross happening? No, you don't need a whole lot of hacking. Trading less is really more, guys. The key thing here is you don't want to get sucked in. You don't want to be saying, I'm going to see what I can grab out of the market today and trade all day. Your brain's going to be fried. You can't tell one retracement from a reversal, you know, after you've been sitting there for 3 hours looking at trajectories and alignments and this, you know, because here your sto's crossing, here's your sto's crossing also. You know, after a while, everything just becomes a mirage. And then you get caught in things like this, where you jump in on this candle, then it whipsaws, hits your stop, and you just frantically start hacking in the jungle, getting frustrated, developing bad habits. I would much prefer you have one market up and say, I'm just going to trade reversals today or for the next week. And I'm going to wait for the 1 minute and 3 minute to show up both yellow or blue. And I'm going to ride the trend and make $200 and double my account over the next 3 weeks. That's all you need to do for a while. Don't try to be $1 million. We never said you were going to make your $1 million by Friday. We never said that. Okay? This is an investment that you build over time. And this is the most important message for this month, is finding that focus. You know, we've talked about counter trending, and today it's all about the reversals. You know, if you get bored sitting looking at one market, put up 2 markets. All you need is your 1 and your 3 minute chart, just like this. And if you want, you can bring up your little Segreta radar. You know, and you can just have the market there, and you can go with the buy sell signals. There's your buy, you got your buy, you got everything lined up, your stows are there, and you're good to go, and you take your trade. And you can put this format with one market on one monitor and put another market on another monitor and wait for those alignments and do one trade in one market and one trade in another market, and you're done for the day. If you do that, you'll make your $300, $200 very easily. No more hacking in the jungle, experiencing death by 1,000 cuts, being frustrated with all these hundreds of bad habits that you collect along the way. Okay? This is not how you should be trading. You're developing the skill of learning certain strategies, and you're waiting for these alignments in the market. And the key thing is patience, and the key thing is less is more. Once you've doubled and tripled your account, guess what? You have a lot less trading issues when you have money in the bank. When you have very little money in the bank and you've taken a few too many hits, boy, do you have some issues trading. You have a lot more to work through. And that's when you need to be more focused than ever. What can we use with the 50-minute quant associated with the 1 and the 3? That's in my next class, Joe. You missed the trending class. That's when we do the trending stuff. On the mirror, do you need to align the 1 and the 3 as a buy on both? No. You don't need to align them. Sometimes they'll appear, they'll flash, and they'll reappear, and so on. You don't. As long as you see your green 1 on 1, and if you see a buy and it works nicely, then you can take it. So are there any other questions? So the message of today is all about spotting retracement versus reversal, knowing when you need to take 3 ticks, paying attention to the resistance point, knowing when you can take a few more ticks, either stopping at the 50 or going a little further by using the alignment of your 1 minute matching your 3 minute. And in some cases you'll only get to 3 on the 3 minute. In some cases you'll get to cycle number 8. You kind of have to gauge it as you go along the way. You can see there's a lot of trajectory on this trend, so it will be easier to look. We only traded to 4, and look how much money we made. There you can see it's continuing a little higher to complete the cycle. Will you give me a phone call? Absolutely. The best thing to do is, because I'm overseas, so I'm using my Skype, so I don't have a number that you can call me because I'm abroad. The best thing to do is to send me an email with your number and the best time for me to call you, and I'll call you if you need to talk to me. Awesome information. Excellent. When will we be doing trend trading again? I'll be doing trend trading next week, because this is part of the counter trend, and then I'll be doing scalping the week after. But the trend trading I'm going to be covering next week will be more on the higher time frames, and I'll also be talking about the daily charts as well, which is something I haven't talked about in a while. Please give me my email. I'm a lady, not abroad. You're so funny. I don't know what I am these days. I don't know whether I'm coming or going. You can send me an email at melaniesuntrades@gmail.com. And remember, guys, as for those of you who might have come late, if you want to sign up for Segredo, you must use the shadowtraders.segredoquant.com, okay? Because we're on a counter trend on a higher time frame going short. But you can see there's only so much price action, which is why you don't want to be trying to grab every cross and every trajectory. You just want to look for the real alignments. Like I wouldn't be taking this one because we're going into the 100, but I'll take this one because the stows are aligned, lots of divergence. So you got to separate and filter the noise. You got to look for qualified entries. And so I always tell people, look, if you make 5 trades and you find you always start losing at 5 or more, then you know what, you should do 3, because you want consistency. And if you do 3 trades consistently, or if you do 4 trades and you're always losing, you should do 2 trades. And if you do 2 trades consistently for 2 weeks, you know, starting out with 1 contract, you'll be very comfortable to go to 2. And then you'll be very comfortable to go to 5. You know, to 3, then 5, because you're looking for consistency. You're not looking to see how much you can get out of the market. That's what a focused, you know, if you knew that you could wake up every day and you could find 2 of these, 2 reversals, if you drop 5 contracts on it, there's your $1,000. Build it up to 5 contracts. I'd like to do one. Yes. But baby steps, guys, baby steps. Come on, you can do it. You just gotta stay focused and use your tools wisely. The biggest problem I try to help traders with is that everybody makes the mistake of learning some rules. This is where you get lost in the details. You learn some rules, you go, okay, I learned the rules, I understand strategy, and then you open the market and you go, all right, like you're some sort of GPS, and you start to navigate, and you go, okay, now I think the market's going to go, now we're hitting the 200. Do I think it's going to come down, or is it going to go through? Well, let's see, the stows are at the bottom, the MACD, I think it's going to go through, so I'm going to, it's going to go through. Now, is it going to stop at the S4, or is it going to go through? Is it going to come down? And you do this for 2 hours, and your brain's fried. And then before you know it, you think it's going to go higher, then it goes flat, then you sit there, then you suddenly take a hit, and then you back to battery. Do that for 2 weeks straight, and your brain is really fried. And after a while, when you make too many mistakes, you can't make a good trade if your life depended on it. So don't navigate the market. You're only going to experience death by 1,000 cuts. What you want to say is, okay, today I'm going to trade reversals, or today I'm going to just do 3-tick cap trades, or today I'm going to do clear trades. And don't do one clear trade, one gap trade, and then a reversal either, because that's like going from first gear to reverse gear to third gear. Your brain doesn't work like that. You want to just zero in on specific alignment. Like, okay, I'm going to take the reversals with the majority of the moving averages, the stows in the MACD, and I'm going to look for my, my number one, my blue bar and my number one. Let me see where it is. That's at 740. There you go. Okay, so here's my blue bar number one. Bang, I'm in. And does it align with my my 3-minute chart? Let's see where our 740 move is. And there, look at that. Look at our 3-minute chart. The 3-minute told you way back at 724, hey, we're coming in blue, 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 blue. And there's your 3-minute number one. Bang, 736, it gave it to you. Look, your 3 minutes in perfect alignment with your 1 minute, and you got your moving averages going your direction. You're just looking for one of those a day. 1 or 2. So stay focused, build your account, and add more contracts. That's the way to do it. Do you have a PDF of the perfect trade? I have the rules, Barbara. I can't find them. I did have a PDF. I'll have to dig it up. You just have to send me an email. Barbara sent it to me a while back, and I just have to find it somewhere in my inbox. Anyway, guys, I have to run. Any last minute question? An enlightening class? Thank you, Yang. So guys, send me those emails, remember, and if you need help fixing your subscription for Segredo, please shoot us an email. We'll fix it for you. And otherwise, I wish you a happy trading tomorrow. Stay focused, and I'll see you guys next week. I wish you a very good night. Thank you.
The organizer has ended the session, and this call will be disconnected. Goodbye.